Adrian Douglas, thank you so much for being on the show with us today.
It's a pleasure, Daniel.
Sir, we're investigating silver as much as we can. We recently did a silver video going over the fundamentals of silver. We've contacted you because we're very interested in hearing the manipulation side of silver. Before we start, though, I'd just like to get your thoughts on silver hitting 35.24 right now as we speak.
Yeah, this is a good day to be talking to you because silver just hit another 31-year high. And I've told my subscribers that I think we're entering into a parabolic phase here. So I think silver has a lot further to run before we see any meaningful correction here.
Just to get into the manipulation side of it, because most people are very familiar with the fundamentals, the supply of silver versus demand, the silver uses around the world and new uses. If you wouldn't mind going into and just take your time with us, the manipulation that's going on in the silver market, as well as in general your thoughts on SLV, because a lot of people are using SLV to purchase their silver investment.
Right. Well, I think a lot of people try to dismiss manipulation without really looking at the facts, and there are some really indisputable facts. Last year, I wrote an article which looked at the cross plot of gold prices with silver prices, and I was quite astonished to find that over a 7-year period from 2003 to 2010. You get a linear correlation, which is almost perfect correlation between the gold price and the silver price. In fact, there are two parallel lines. One is before 2008 and the other one is post-2008. Well, that means that if at any time in the past you told me what the gold price was, I could tell you what the silver price was on that day just from this correlation. Now, you can't find two commodities that correlate like that. I mean, there shouldn't be a perfect correlation between two prices, particularly when gold and silver are quite different commodities, because silver has obviously a very large industrial use, whereas gold doesn't. So that was a real smoking gun in that that correlation existed. Now, interestingly enough, since October, that correlation has broken down, and silver is starting to find its free market price, which I think is many multiples of its current price. Also, what was a watershed event in the silver market and the manipulation story was Andrew Maguire, who's the whistleblower who had contacted the CFTC in November last year. November 2009, and given the CFTC advanced information about manipulation of the silver market. And the CFTC had largely ignored him until myself and Bill Murphy were at the CFTC hearing on precious metals in March 2010. And we brought it to the public attention of the information that Andrew Maguire had given to the CFTC. And that I think embarrassed the CFTC because they had done very little. They were trying to look the other way. And as a result of that, as you know, there has been several lawsuits that have been filed against JP Morgan and HSBC alleging manipulation of the silver market. It's quite important to note that those major law firms are doing that on their own ticket. They're not customers or clients that are paying for that there. So they have to be very convinced that there is a strong case for manipulation to take on those class action suits. And of course, the real smoking gun was when Bart Chilton, last October, came out and said, in his personal opinion, the silver market had been fraudulently suppressed and controlled, and that it should be prosecuted. And so, there's many pieces that all fit in this puzzle. And I think unless you want to be really disingenuous, you can't dismiss them and say that the silver market is freely traded and there's no evidence of manipulation. I think now it's almost impossible, if you're logical and look at the facts, to dismiss manipulation. I think it's pretty much a proven fact now.
Now, most people, when they think of manipulation like for the stock market, where the Dow Jones is being manipulated up. Silver, you're saying is being manipulated down. In your opinion, does this create an advantage to the average investor? Because right now, a lot of people are scared about silver, who are focused on it. They're a little nervous because it's gone up, from roughly $15, $18 to 35 now in a short amount of time. If you could just kind of let us know your thoughts on how manipulation plays into the average investor's advantage.
Yeah, the manipulation obviously cannot continue. So, there's never been a manipulation of a market that has continued forever. They all come to a sticky end. And this is the opportunity for investors, is that the price of gold and silver have been depressed way below their true market values. And obviously when they find then true market values, then the investor is going to make huge gains. The reason why silver has been suppressed is because gold has been suppressed. And gold has been suppressed because that makes the dollar look more valuable than it is, and it allows the U.S. government to live beyond its means. And the true price of gold, I think, can be estimated. I've done this in a few of my articles, that if you look on the Fed's balance sheet, they have a line item which essentially has all the Treasury's claimed gold of 261.5 million ounces of gold as a line item, which the footnote says is the collateral against which all Federal Reserve notes are issued. And so let's say they've issued approximately $15 trillion, and the collateral against which they're issued is 261.5 million ounces. That gives you a price of the dollar of $57,000 per ounce. That defines the dollar. Once you've got an asset that you issue notes against, that defines that note. If you have a house and you issue one note, that note is worth one house. If you issue 10 notes against your house, each note is worth a tenth of the house. So that defines the dollar. So you cannot now go into the open market and trade the dollar and find a different price for gold. So how come we get a price of $14.25 an ounce for gold when I've just said the dollar is defined at roughly $57,000 an ounce? Well, it's because we're not talking about gold. We're talking about an average of all the different types of supposed gold that exists out there. And only about 1/45 of it is real physical gold. The rest is unallocated gold and derivatives and paper gold, which doesn't exist. So I estimated that the LBMA trades about sold 45 times as much gold as they actually have in the vaults. So that means that there's only one real ounce for every 45 ounces that are promised. And so if you take $1,400 and you multiply it by 45, you get $64,000, which is pretty much the same as what we just calculated from looking at the definition of the dollar from how it's issued by the Fed. So I'm not saying that the gold price will go to that tomorrow, but that is an indication of what the true value of the dollar is, not gold. Gold defines the price of the dollar. Now, what about silver? Silver has been suppressed so that gold could be suppressed. What is the true market price of silver? I really don't have a clue. It's many multiples of what its current price is. And I have stated in previous interviews that I believe eventually one day silver will trade at a higher price than gold. Now you may think that's a crazy suggestion, but it's based on logic in that we've taken gold out of the ground and put it into vaults, and very little is lost. Pretty much all the gold that's ever been mined is still above ground somewhere. Silver we take out of the ground, and most of it is lost. We use it in cell phone batteries and electronics, and eventually ends up in landfills. There's a certain amount in photography that gets recycled, but most of it is lost. So even though silver has been more abundant in the earth crust than gold, if you keep taking silver out of the ground and getting rid of it, eventually you change the balance. And we're in that situation now where silver is more scarce than gold. So I think it has to solve the problem, you have to have a price of silver which makes it economic to recycle every ounce that we use. And we are a long way from that. So I think the price of silver has to be closer to the price of gold, whether it's higher or below it. But I think it has to be in that sort of order of magnitude and not the 40-to-1 ratio that we see today. On another point on that, Eric Sprott recently produced some excellent statistics showing that investors are investing almost the same amount of money into gold vehicles as silver vehicles, which he's seen from his silver fund and his gold fund. And it's also something that exists with GLD and SLV. You see a similar thing with the U.S. Mint selling about the same dollar value of gold bullion coins as silver bullion coins. So essentially his conclusion is money's going into gold and silver at a ratio about 1-to-1. So how can the price remain at 40-to-1? It's just not possible. And of course, if money goes into them at 1-to-1, you will eventually end up with something close to my thesis that the prices must be very similar. So, all roads point to silver being many multiples of its current price. Now, you asked me specifically about SLV.
Yeah.
I don't recommend to any of my subscribers to hold SLV, and in fact, one of my subscribers yesterday sent me an email that a Swiss bank has been advised to divest itself of all its SLV holdings and is advising its clients to do the same, and GLD, incidentally. I think that the SLV, if it is backed by silver, that silver is not unencumbered. As I said a moment ago, the LBMA trades many multiples of the bullion it has in its vaults. And, of course, we have the major shorts as the custodians of these two vehicles, with JP Morgan, the custodian for the SLV, and HSBC, the custodian for GLD. These guys are bullion bankers, and those are the guys that I believe have sold multiples of the gold and silver they have in their vaults. So if they've sold the silver that they have, let's say 45 times over, what's the problem with putting it into the SLV and making it 46 times? I don't think that would be an issue for them. So it may well be that the SLV has silver allocated to it, but is it unencumbered? Is it truly 100% backing the SLV shares? I don't see anything in their prospectus that tells me that claim is not true. All this discussion about the GLD and the SLV would be very simple if they put in their prospectus that the shares are 100% backed by allocated metal that is unencumbered, is not loaned out, it's not belonging to anybody else. It's a very simple phrase or paragraph to put in there. A lawyer could draft it for you in 30 minutes. So if they cannot put it in there and the SLV is fully backed and there is no problem with it, then I'd say, well, I wouldn't want to invest with them in any case, because if they can't say what they're doing correctly so everybody understands it, why would you trust them with your money? But I think it's worse than that. I think the reason they can't say it is because it's not true. If you look at the other funds, such as GTU, SPT, the PSLV, the Sprott Fund, or PHYS, their prospectuses very clearly say that their bullion is unencumbered and it's not loaned out and it's sitting in a vault and it's fully allocated. So why is it not possible that the SLV and GLD can't say the same thing? To me, there's only one conclusion you can draw, and that's because they cannot. So I recommend to my subscribers that they should not invest in SLV or GLD.